Have you been looking for undervalued companies in this expensive market? Well, I have one for you. Let's check it out. Hey, what's going on, you guys? Welcome to my channel, Investing Untangled. Hope you're all doing well. On this channel, I post videos about stock market research, stock market investing, and also educational videos about stock market investing. So if this is something that interests you, hit the subscribe button and the notification bell and follow my content here. So guys, this will be an in-depth video on Lockheed Martin. I'll do a complete business analysis and tell you what kind of markets they operate in, what countries they work with, what products they have, and I'll also look at their financials in the last 10 years, how this company has performed. And they also recently announced their earnings, so we'll take a dive into their recent numbers. They actually posted wonderful earnings, a 20% increase in earnings and also an increase in their revenues. And interestingly, this company has not recovered from the March lows of last year, so it still presents an attractive opportunity at these prices where it trades at. So in my opinion, it's undervalued. I'll also run valuations and figure out the intrinsic value of the stock and why I think it is undervalued at these prices. So guys, this is a value-packed video for you, and in return, if you can hit the like button, that'll support my channel a lot. So without further ado, let's take a look now. So Lockheed Martin Corporation, ticker LMT, this is the biggest defense company in the world. And before the March lows of last year, this company was trading at around $428. And in the market crash, it did actually drop a lot, and it trades right now around the same prices. So it's at $337, which is similar to where it was around the March crash last year. Now let's start with their business first. So here I have an article which basically ranks all these defense companies, and you see Lockheed Martin is actually number one. So from combat ships to hypersonic missiles to fighter jets, Lockheed Martin remains the world's top weapon manufacturer. Now let's go into their annual report that came out very recently, and let's check out what kind of a product line they have. So this is their 10Q annual report that came out recently, and here you see their business model. It's basically segmented into 4 parts. So they operate in aeronautics, missiles and fire control, rotary and mission systems, and space. And for this company, actually US government is their biggest customer. Now looking at aeronautics, US government actually accounted for 69% of total sales in this aeronautics sector of their business. They also have international customers. For missiles and fire control, US government accounted for 75% of net sales. For rotary and mission systems, US government accounted for 72% of net sales. And for space, US government was again their biggest customer at 87% of net sales. So here you see US government actually heavily relies on this company for its defense production. Now if you see which countries have the highest amount of budget going to the defense, it's actually the US. In 2019, it had $732 billion going to defense funding. And a ton of this money is actually going to Lockheed Martin, making US government their biggest customer. In addition to the US, other countries that have high spending on defense include India, Saudi Arabia, Germany on this list, and all these are actually international customers of Lockheed Martin, and you can see that here. So this is the international customers of Lockheed Martin: India, Germany, Saudi Arabia, United Kingdom. They are all on this list here on the top spender list. So this means that even though US government is their biggest customer, they also have a very heavy customer base outside of the US. And all this actually gives Lockheed Martin a very strong economic moat. It works in a very sophisticated industry, and it is the #1 player both in the US and also outside. So this was about the business model of Lockheed Martin and the economic moat that they have. Let's come to numbers now and let's look at their financials. So this is the financial data from the last 10 years, and here you see the revenues have gone up from 46 billion to right now they stand at 65 billion. Net income has gone from 2.6 billion in 2011 to 6.8 billion right now. The company has also increased its dividend pretty steadily from $3.25 per share. It stands at $9.80 right now, and this dividend is very sustainable. The payout ratio looks very reasonable, of 40%. And another interesting thing is that this company has been buying back its shares consistently, so the management is very much shareholder oriented. So from 339 million shares in 2011, this company has 281 million shares outstanding right now. So this is actually good. It is increasing per share value for shareholders. Looking at book value per share, so from $9.11 in 2011, it stands at $21.47, showing a massive rise in book value over the last 10 years. Now looking at cash flows, so operating cash flows of $4.2 billion in 2011 to $8.83 billion in 2020. Again, a very significant rise there. And also free cash flow from $3.2 billion in 2011 to $6.4 billion in 2020. So all these numbers basically suggest that all the way from revenues to net income to cash flows to book value, everything has increased for this company over the last 10 years. The dividends have gone up. It's a blue chip company in that sense that it's very stable. The management is shareholder oriented. So everything looks good here. Now, if you look at returns, what kind of returns the management is getting, return on equity and also return on invested capital. Here you see the returns on equity are extremely high for this company. And as of 2020, it stood at around 150%. And return on invested capital is also extremely high, close to 45% as of 2020. This shows that the management is doing a wonderful job at deploying the cash and getting wonderful returns on equity and invested capital. Now let's take a look at the recent business performance of this company. So they released their earnings very recently, and this is from their latest annual report. So here you're looking at the income statement, and here you see that the company actually registered increase in sales to $65 billion in 2020 from $59 billion in 2019. And this happened during an economic turmoil situation when all the other companies were struggling. So this is a very positive sign. Also, there is a very nice increase in net income. It stood at $6.8 billion at the end of 2020 from $6.2 billion at the end of 2019. And this resulted in an increase in their EPS. Diluted EPS stood at $24.3, an increase from $21.95 in 2019. And here you see sector-wise how their sales performed. So aeronautics sector of their business is the biggest sales generator for this business. And here you see it generated $26 billion in sales. And the others were lower than aeronautics numbers. But all these sectors actually saw an increase compared to 2019 numbers. Now let's take a look at the balance sheet of this company to see how stable this company is financially. They increased their cash reserves to $3 billion from $1.5 billion in 2019. And overall total current assets also increased to $19.3 billion from $17 billion in 2019. Total assets also increased to $50 billion from $47 billion in 2019. And looking at their liabilities now, their liabilities, the current ones, total current liabilities stood the same as they were at the end of 2019, so $13.9 billion. So this is good. The company is increasing its assets while the liabilities are staying the same. Long-term debt has remained more or less the same at $11 billion, and total liabilities are also more or less the same, $44 billion at the end of 2020, and it was the same in 2019. And this resulted in an increase in stockholders' equity to $6 billion from $3 billion, $3.1 billion. And all these awesome numbers happened for this company in 2020 when the overall economy was struggling a lot and there was economic turmoil across the whole world. So this is a very positive sign for this company. Now looking at their cash flows from operation also increased to $8.1 billion from $7.3 billion in 2019. And the company actually paid more money out in dividends in 2020, $2.7 billion compared to $2.5 billion in 2019. In 2020, a lot of other companies were cutting their dividends, and at the same time, Lockheed Martin increased their dividends. That shows how financially stable and healthy this company is. And in 2020, the company spent $1.1 billion in buying back their own shares, and this was more or less similar to what they spent in 2019. So they kept their stock repurchase program going, which is very good for shareholders. So all these financial numbers, the current ones and also from the previous years, show that this company has performed exceptionally well in the last 10 years or so in growing their business. Now let's look at valuation to see if this is the right price to buy this company at. So here on Yahoo Finance page, you can see that this company is trading at a forward PE of 12.79, which is extremely cheap given how expensive the market is right now. S&P 500 index is trading at a PE multiple of more than 35. So this shows that this company is undervalued right now. The analysts here think that for the next 5 years, the company is going to grow by 6%. and in the last 5 years, it has grown by 15.8, almost 16%. So using this future growth of 6%, I calculated the intrinsic value of this company using the discounted cash flow valuation model at a 10% discount rate and a 3% perpetual growth rate. I came to an intrinsic value of $410. And Lockheed Martin right now is at $337, which suggests that this company may yield an 11.4% annual return. Here you'll see that Morningstar analysts also think that the company is undervalued. They have a fair price valuation of $433 for this company. And if you look at Guru Focus, here also the analysts think that this company is undervalued. So their estimation is that the company is undervalued by almost 30%, and they have calculated the fair price of this company at $415. So my own DCF intrinsic value calculation and all these analysts' estimates all suggest that this company is undervalued right now. This is a company which has produced wonderful financial results in the last 10 years, and this might be actually an interesting opportunity to look at Lockheed Martin in detail to see if this fits your portfolio as an investment opportunity. So this finishes the analysis. I personally do not own this company yet, but I'm taking a keen look at this stock as a potential investment. I really like this at these attractive prices. Let me know your thoughts in the comment section below about Lockheed Martin, if you already own the stock or if you are planning to invest in it, and I'll be sure to follow up with you. If this video was informative for you, please consider leaving a like and subscribe to my channel Investing Untangled. That'll help my channel a lot. I'll be posting more videos about detailed stock analysis of different companies in the future, and I'll also come up with investment opportunities that are presented in this current market right now. So stay tuned to my channel and follow my content here, and I'll see you in my next video.